You brought up the 10 years, so let's talk about that. At 266, doesn't that seem to suggest it's pricing in the possibility that what Powell was talking about Friday was he was suggesting a pause? No?
Well, the 10 years has rallied, so the yields have decreased well before Powell made those comments. So, I think if you've got a 10-year at, say, 2.65% and you've got economic growth at above 2%, so even allowing for some significant retraction in growth, and you've got inflation at that 2% mark, the fixed income markets are pricing in something very, very negative, which the data is not suggesting. So, I think we become very reflective on equity market volatility and what the equity market's telling us, but not what the other markets are telling us. And at the moment, equities are creating a lot of volatility. The Fed itself is creating a lot of volatility, where the bond market, to my mind, and the currency market, the US dollar, is suggesting that economic strength continues.
Okay, so let's drill down into equities if we could, Dave. You're saying that consumer discretionary, especially the high-quality names, they're probably a little oversold at this stage. Your focus is on companies leveraged to the U.S. economy and also consumer on the bet that all is well.
Yeah, and look, just to clarify, it's not all is well. I think we will have a slowdown, but the way some of these companies are being priced, particularly through Asia, suggests that the consumer is in a lot of trouble and that consumer spending is going to decrease significantly, where I think we will get a slowdown, but certainly not warranting some of the prices that we've seen across the globe in consumer discretionary. So to my mind, that creates a very good value opportunity at the moment, because they've been too heavily sold in the last 3 months. So,
Okay.
and you've got to clarify here, we are talking high quality consumer discretionary names, which do leverage off parts of the economy. So even in China, where you have a look at growth slowing, I do think that the growth is going to slow into this year. But when you have a look at the high quality luxury goods, we're seeing a little bit of slowing, but I don't think we're seeing anywhere near the bad data which the price decline suggests.
All right, Dave, does your view assume that we are going to see some sort of positive resolution, or at least positive movement, in terms of those U.S.-China trade talks, which start today up in Beijing?
Yeah, look, I think we will. I think when you look at the US-China relations, the US is in a very strong position and China's slowing. So, I think we will see a resolution, and I think it will come from China backing down to some degree.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.